So house prices, what do you think is going to happen?
Underlying still going up. People still are convinced there's a big shortage of property out there, but I wouldn't be surprised in the next 6, maybe even out to 9 months. There are some months when the house prices overall fall a little bit.
Welcome back to Tea with Tony. This month it's all about the housing market. Will prices ease or continue to truck along? We dig into the government's recent housing announcement, and let's not forget the Aussies are coming. But first, what are we drinking, Tony?
Peppermint tea I can see you've got on the box there.
Yeah.
This seems quite good. I've had this sort of tea before and actually this one I like.
Yeah, I think you like it a bit better than the other one, eh? Okay, let's get straight into the sticky stuff. So house prices, what do you think is going to happen?
Underlying still going up. People still are convinced there's a big shortage of property out there, but I wouldn't be surprised in the next 6, maybe even out to 9 months. There are some months when the house prices overall fall a little bit, because after all, they went rocketing up in January and especially in February, probably in March when we get the numbers as well. And as I've been saying to some people recently, even if prices fall 15% over, just a few months, you're only back to August last year. So I have no problem thinking there'll be some temporary falls, but the underlying trend, I think, is still upward.
Right, and certainly from an NZHL perspective nationwide, we're still seeing real buoyancy in the market and submission levels. So nothing sudden or jerky on the back of the government announcement that we've seen, and is that what you're experiencing as well through your surveys? Well,
certainly jerky when it comes to the emotions from the landlords, the investors out there. None of us expected the intensity of the clampdown on deductibility of interest expense there, so that's quite a shock. And I've run 3 surveys since the March 23 announcements, and all of them show some fairly hefty pullbacks by investors, either in the market looking at things, or they're saying they're not going to buy, or they're saying they're going to sell, they're saying they're going to raise rents. I think there's quite an element of the spitting of the dummy going on there, but in all cases there will still be an impact. Fewer investors are out there buying, some will sell, and rents will go up to some degree.
So on that point, Chloe Swarbrick, the Green MP, made some comments in Parliament on the back of this announcement around investors crying crocodile tears. What's your take on that?
Yeah, that's a difficult one. I mean, certainly if you look at a 25% increase in house prices over the past 9 months, the average investor has made enough capital gain to pay the average increase in their costs, the deductibility change, for maybe the next 20 years. So I can see sort of where she's coming from, but she also misses the point that many of these investors are just average people looking to build up some wealth for their retirement. They may be running at a small loss or only slightly breaking even, but now for many of them, it will simply be impossible to keep the rents at the same level, or just to keep the property overall. So some people do face some big decisions, and I wouldn't underplay the impact it's going to have on some people out there.
Yeah, and look, we're hearing that anecdotally in the market too. People, particularly people that have moved recently, just trying to save for retirement, and they feel, fairly aggrieved on the whole thing. And look, that brings us to the next point around first home buyers. We're seeing a lot, quite happily, playing around and popping off to auctions. Big win for them.
Yep, yeah. You would think it's a win for the first home buyers, but that all depends. You see, the investors have now been incentivised to buy new builds, basically new townhouses, new apartments, low maintenance, and so the first home buyers are actually going to find that while the investors are pulling back from the existing housing market progressively over the next 4 years for many of them, it's going to be harder for those people to buy a new property. But now it's a question of, can there be a good supply response from the developers all of a sudden providing extra new townhouses, etc., into the market? That's going to be the test for maybe the next 4 to 5 years.
So the message is, if you're a first home buyer, you also want to be a builder?
If possible, but if you're married to a builder, often people have said to me, be very, very careful, because they never finish their own house.
It's true. It's a true story. And look, there's one, just on the government policy, there's one group there's been a lot of chat on, and that's renters. Lots of feedback in this space, and I know you've got some strong views. Are they the big losers here?
Yeah, one of my surveys, I actually asked people, of the 20,000 people on my mailing list, are you a renter? Do you think your rent's going to go up? Has your landlord told you your rent is going to go up? Has your landlord told you that they're going to sell? And in some cases, yeah, they've received that information. It basically indicates that for some renters out there, things are going to get worse. And basic economics 101, demand and supply curves, says if the cost of supplying a product goes up, you will end up in equilibrium, less of the product in the marketplace, and its average price will be higher than it would otherwise would be. So yeah, some, not all renters, will be worse off.
So essentially, this is going to squeeze renters at the lower end of the market, isn't it? And cause kind of a need for greater government influence and therefore social housing.
Yeah, well, this is the underlying fundamental for New Zealand's housing market. Since the middle of the 1990s, not enough affordable houses have been built in New Zealand, and certainly not enough social housing being built in New Zealand. And already the size of the waiting list has blown out about 4 times over the past 3.5 years. And for some of these people, they're not going to find the rental accommodation that they want. And I think you're going to find more people out on the streets and going onto the waiting list, essentially. So Kāinga Ora is out there working with developers, trying to secure as much property as possible, as quickly as possible. And they've just got an extra $2 billion they can borrow to buy land to do extra building. So look, the outlook for builders for the next 5 years is basically gangbusters.
Because Kāinga Ora, the first home buyer caps have just increased in some of the regions, I believe, as well. And within our network of 70 business owners, of course, they've been quietly pleased with some of that shifts. I think anecdotally, some of them would have liked to have seen those caps come up even more because we work with a lot of first home buyers and it's quite hard for them, but I think a step in the right direction. Would you agree?
Yeah, a step in the right direction and a difficult one to work with, because if you increase those limits, it effectively is an increase in demand, and it's like you're shifting the price point up even further. So it's almost a catch-22 situation. And maybe the government realising that is why they've tried to take away the demand coming from the investors. And look, we couldn't guarantee that this is the end of it. In fact, in the budget, I think on May 20 this year, there are going to be some further measures as well. Well, we didn't pick what was coming out on March 23, so I'm not going to try and pick what comes out.
I was just going to ask.
May
Come on,
20.
Tony, put it all out there.
No. Ask me the day after.
Yeah, you're pretty good at that. Okay, so look, I really want to ask you about the Aussies. The Aussies are coming. It's quite exciting, I think, the bubble opening. But what's the net effect, do you think, from the Australians coming and us being able to reciprocate?
It's positive for the economy overall because Australians do tend to spread themselves all around the country. They don't do as much travelling on tour buses as other people do. They may not necessarily get down to the West Coast as much as others, or maybe up to Northland, but they definitely do spending here, and it's going to be a boost for the economy. And I wouldn't be surprised if there's quite a boost for the likes of Queenstown Lakes area, because they'll simply be wanting to shout themselves, I think, some revenge travel. If Aussies want to do this as a rule, they go to Bali and splurge out for a week and get absolutely blotto. Well, I don't know if they'll do that in Queenstown necessarily, but it's going to be...
Trust me, they do.
They do. It's going to be a benefit for New Zealand, for the street cleaners in Queenstown as well.
Aussies often travel with a purpose, and skiing and luxury or wine destinations. So yeah, I agree with you. I think Queenstown Lakes is going to be a big benefiter. My understanding, however, there will be regions within New Zealand that may suffer because they will lose the domestic tourism. So it's going to be an interesting mix, isn't it, Tony?
It is, and this is one reason I set up my monthly spending plan survey back in May, so I could start to gauge how our spending preferences would change. And already I'm finding that although we Kiwis are still saying, yeah, I'm going to engage in domestic travel, fewer of us are starting to say that. I can see that pulling back, just as I can see us starting to pull back on buying furniture and appliances, the things we've binged on this past year because we couldn't travel overseas. The opening of the borders for New Zealand, the initial Trans-Tasman, but more significantly for the world in general, is going to have a major impact, especially on the retailing sector around the country, and eventually on the tourism side.
That's really interesting, because in the last Q&A segment that we had, you mentioned that, and you'll remember, you sort of said to everybody, look, just note that, if you're a provider, a retailer, this buoyancy may not continue forever, particularly when the borders open. So I think that's a really interesting point to make. I'm going to say a dirty word. It's not like me. Inflation.
Yes.
What do you feel like when I say that word?
Yeah, I still get jitters because I was brought up in an era of stagflation, weak growth and high inflation, worries about wage price spiral, etc. The story following the global financial crisis was the inflation just would not appear. No matter how much interest rates would be cut by central banks or money printed, they couldn't generate the inflation. And that's had an important consequence for how central banks have handled this crisis. They all made a decision 13 or 14 months ago, right, we're going to take the risk this time of cutting interest rates too far, keeping them low too long, generating too much growth and too much inflation, because we know how to handle inflation. Fighting deflation, falling prices, is extremely difficult. So the central banks are basically planning at some stage inflation, it will blip upward. Just none of us know exactly when or by how much interest rates will have to rise when that happens. I still think it's a wee ways out, but fixed interest rates rising maybe before the end of this year.
Okay, great. Well, thanks, Tony. Is there anything else you'd like to add?
I think New Zealand economy is in a reasonably good position in that underlying it all, when you really get down to the basics there, we are a big farm and the prices for agricultural products overseas are very strong and rising, especially for dairying, but also for logs. Good demand from the aquaculture sector, horticultural products, all of this. And that is traditionally where New Zealand's economic recoveries come from. It's the primary sector. So away we go.
If you can get people to fill the jobs within the sectors, that's our only other issue there, isn't it?
And that's a key issue, I think, for New Zealand going forward. We have a labour shortage, and it's not a temporary thing. It's structural, and it's going to get worse because the Immigration Minister has made it very clear when the borders open up, he will not be allocating as many migrant working visas as was the case in the past. And businesses are going to have to focus on labour-saving technologies. And in the home building sector, this becomes very relevant. There's still a shortage at the moment. There are lots of orders going in for new houses, and there's already a shortage of the electricians, the carpenters, etc. Actually, this is going to get worse because once the border with Australia properly opens, with a massive house building boom underway in Australia, it's part of their stimulus recovery effort, a lot of people are going to leave New Zealand and earn 2 to 3 times the income as a carpenter across in Australia. So to the builders out there, my message is basically look after the tradespeople you've got, because they're going to be tempted to hop across to the GC or anywhere else in Australia fairly soon.
Yeah, and I think that's a whole topic on its own. To be honest, I think it's a really nice segue into, and when we get back together in a month, we can really dig into that because we may know a bit more about the situation, particularly with the borders opening. Look, thanks a lot, Tony, as always. Great chatting, and I'm going to finish my tea.
Okay, me too. Thanks very much, Lenska.